So today we're going to start actually a 10-part video series I'm going to shoot over the next 10 weeks or so. And I'm calling it the 10 myths of options trading. And this is basically a series focused on all of the sort of foolish thoughts that people have about options trading and how dangerous they really are. And if you fall into any one of these myths, you can cost yourself a lot of money or forego a lot of opportunity. Either way, it's good to take into consideration some of the points we're going to be raising in these videos. I want to point out that virtually every myth in here, I've been subject to at one time or another. It's myths that you realize are myths once you've been through them, victimized by them, or otherwise, just observe that they're myths. And so I'd like to say that these videos are about the most important information that I can share with you. We could talk about great option strategies, great setups, trades with very high win rates, very high returns, all that's wonderful. But if you fall into these traps, you will blow up your account and never be able to trade any of these strategies. So these are actually very, very important lessons for you as an options trader, and I'd suggest that you take them seriously. So the myth number one that we're going to go over today is the following. I will trade the same with $5,000 of capital as I do with $500,000 of capital. Now, it's sort of obvious that that's not true, but many people can fall into the trap of believing that. And here's how it develops, and I want you to pay close attention, because if this sounds something like yourself, you definitely have to watch the rest of this video. So here's how it goes. You fall into either one of two categories. You want to get rich quick, or you want to quit your job, you're sick of your job, and you figure I'd have a lot more fun trading options for a living, so that's what I want to do. And getting rich quick is almost impossible unless you hit the lottery. Quitting your job is very foolhardy unless you have a new career or a new skill, such as options trading, that you've developed over a number of years. So first of all, ask yourself, am I in any of these two categories? If I am, keep listening. Another issue that comes up is that people call this options income trading, which I've talked about before, as a misnomer. Options income implies that you put some capital up every month and you get some income from your capital. Well, it doesn't work that way. Some months you're going to lose money. So it's not options income trading, really. It's market neutral, positive theta options trading. It isn't quite as catchy, but it's a lot more accurate, and it's definitely not deceptive. So let's take the hypothetical guy who takes a couple courses in options trading and actually starts making some money trading options. Maybe it goes like this. He trades a strategy with his $5,000 of capital initially that has a target profit of $500 and a maximum loss of $500 for every trade. Let's say these are monthly trades. Many times with this particular strategy, the trader will draw down $400, but recover from that and make a profit or even hit his target profit. That'll happen many times. He's trading $5,000, he observes it, it's not a lot of money, he's not too worried about it because he knows he's back tested the strategy, he's paper traded the strategy, he understands that sometimes this is going to draw down $400 before it recovers and you make a lot of money. So let's say in this hypothetical case, after 6 months, this trader is up $1,000 on his $5,000. It's very doable in options trading in certain markets. So he's up 20%, $1,000 on $5,000, and the worst drawdown he ever experienced during the entire period was $500. So let's take a hypothetical 6 months for this trader. Let's see how he got to $1,000. Month one, he made $350. Month two, he made $500. Month three, he got stopped out, lost $500. Month 4, made 250. Month 5, he made 200. Month 6, he made 300. That's how he got to his $1,000. Now, I want you to focus on the asterisk on this slide. In 3 of those months, he got drawn down to $400 at one point during the trade. Month 3, it went to $500, he got stopped out. The other months, he recovered from $400 and ended up making $350 in one case, $200 in the other case. So keep that in mind. But it was $400, $500. The guy's got $5,000 in his trading account. He has much more net worth than that, hypothetically. So he's not too worried about that $400. Now the disaster happens. What's the disaster? The disaster is a thought that the trader has. And the trader says to himself, well, gee, I made 20% on $5,000. If I had traded $500,000, I'd be up 100 grand. I could go buy a fancy car, impress all my neighbors. This is crazy. Why am I trading $5,000? I made money 5 out of 6 months. I'm great. I'm invincible. This is an ATM machine, as one mentoring student once told me, one unsuccessful mentoring student. So this is the moment of truth, or better, this is the moment of falsehood. This is the worst thing that can happen to you as a trader, is to think that thought. And so the next month, let's just say hypothetically, the next month, he pours $500,000 into his trading account, starts trading the same strategy, same properties, same likelihoods of drawdown mid-trade, everything the same, except this time when he draws down $300, let's say, now he's not down $300. When he's trading $500,000 of capital, he's down $30,000. Well, he's not used to seeing his account draw down $30,000. While $500, $300, $400 may have been chump change to him at the $5,000 level, at the exact same level of drawdown, in fact even less, a $30,000 drawdown would be the equivalent of a $300 drawdown at his previous capital level. He hits the panic button. His mind fills with doubt, fear. He's kicking himself. He can't believe he got himself into the situation, and he closes the trade with a $30,000 loss. Well, think about that slide I showed you of the first 6 months of this trader. 5 out of 6 months he made money. 2 out of the 3 months where he had drawn down $400, he made money. The very good likelihood is, if the hypothetical trader in this case hadn't panicked out at $30,000, there's a very good chance he would have recovered and made maybe $10,000 that month, maybe $20,000 a month. But the sheer dollar amount was something he was not ready for. It was a wonderful idea that unfortunately was impossible to translate into reality because of the psychological barrier of jumping from a drawdown of $30 to $40 or $300 to $400 and translating that into a drawdown of $30,000 to $40,000 in the exact same situation, just on a greater level of capital. So how can we avoid this trap? The way to avoid it is by understanding that sizing up your trading account is exactly like a bodybuilder building his muscles. Specifically, if you were going to wanted to bench press 500 pounds, you're not going to be able to do that right off the bat. You may have to start at a much, much lower number, 100 pounds, whatever. And it is not going to take you 3 days to get to the level where you can bench press 500 pounds. You're going to need quite a long time and a very gradual increase up to 110, 120, 130, however it works. a very gradual process to get up to 500. Who knows, maybe it could take years, but it is not going to happen in several days. Risk tolerance and muscle building have a lot of similarities. You are not going to be able to go from being able to tolerate a drawdown of $400 to being able to tolerate a drawdown of $40,000. You can get to the level where a $40,000 drawdown is no problem for you. You may be trading $20 million at that point, but you can easily get to a point where that level of a drawdown is not something that bothers you psychologically. But you're not going to get there if your account is $5,000 and you bump it to $500,000 without any interim steps at all. If you increase your capital very, very slowly, over time you can build up that muscle. And then that statement that I could have made $100,000 actually can become true. But you are not going to get there all at once. Everything about trading is a gradual skill building process. And in this case, it's a gradual psychological risk tolerance improvement. And that takes time. And if you try to rush it, I assure you, you will regret it. I am positive that you will regret this step. So I've made this myth number one because I think it's actually the most important mistake that people can make. And the reason it's the most important mistake is some people never psychologically recover from a loss like that, or they do recover, but if it affects them so deeply in their trading that they never really shake it, and it affects their trading. Whereas if you had built up to a gradual, build up gradually to a large level, had you done it intelligently and gradually, then you would not be scarred psychologically by a particular experience. You would expect it. You would have come to expect numbers like that to occur, drawdowns like that to occur. You would take it in stride, put your capital up the next month, and probably make a lot of it back. So myth number one, I trade capital at a $5,000 level at the same way I would trade at a $500,000 level. No, you don't, unless you got there gradually. Please keep this in mind. If any of this sounds like you, stop everything, get in contact with me. I'll talk you through it to talk you out of it. If this video hasn't talked you out of it, I will personally, as a public service, do it for you because it is that critical. You will never be able to be a successful trader if you start out knocking yourself out of the game psychologically by making this foolish mistake. See you next time for myth number two.
Came to New York for a few different reasons. I've been to a lot of Andrew's webinars, talked to him a few times on Skype, and the guy, really knows what he's doing. I wanted to finally put a face to a name and wanted to come out here and be part of the class and be part of the S&B culture for a week.
I came to the course because I've already been trading net zero for a few months, and I wanted to understand it properly and really get into depth as to how it works.
This is a trade that works for me. I have had problems. I over-adjust. I typically over-adjust. It's been the bane of my 5-year options trading career. So finding this trade where it's a no adjustment, you put it on, you've got your nice tight playground that you try to stay in, and when you hit either limit, either on the low side or the high side, you just take it off and put the next trade on.
Andrew is an excellent resource, expert on, first of all, back testing, and I learned a lot from him about back testing, and how thoroughly he has back tested this strategy made me very confident about using this strategy for my use. And this is my first really income-based options trading that I am formally learning, and I enjoy the fact that he has back-tested it so thoroughly that you can feel confident about it.
Takeaway from the course is really understanding the key edge to the system. That there really is an edge. It's not something that was just invented. It really exists, that you can trade off it. And I really fundamentally understand now why it works, and I can go back test it myself. And the second part of that was on the course. We actually get into the detail of the back testing, was we actually looked at in depth as to why it works, and I can take that away now and back test it myself.
What I liked about it is the binary feel to it. It's either on or it's off, and there's, I think it takes a lot of the subjectivity out of trading. You can trade it by a rule set. You can add subjectivity, but at the core of things, to me, it was like pretty rule. You know, you're either on or you're off, and you have a plan that you can back test consistently and accurately and scale. I just like that whole approach. A lot of the trades out there are more subjective and they're hard to back test because you might do different things at different times. I felt this wasn't like that, and it was something that I could really get my head around.
The environment here was very pleasant and nice, and we had a chance to meet some of the other experts and meet with the partner of the company and the chief of the options desk, and learned a lot from talking to them, and I think overall this is a very rewarding experience.
This is definitely a smaller, tighter knit community of people than I was probably expecting. And it was a fantastic experience being here for the class, a very fantastic experience.